All right, ladies and gentlemen, let's go. It is time to express more cryptocurrency. And this one's going to be a little bit different because I have just learned that we delete our dollar. Like we shred it every 6 months. That is huge. That is huge. Why is that huge? Well, they have to funnel money in to the US dollar, and sometimes we have a little chunk that pops up here. And in order to keep the economy the same, right? You don't want to break the economy. They have to shred these bills. Now that's pretty important because they keep busting out more of these. So it's like there's this area where they are shredding bills, and this part of the money they don't ever see. This part of the money they burn, and this part of the money circulates in our society. The money that they don't see is like money in people's savings accounts, money in multi-billion-dollar companies that have huge accounts of massive amounts of money, that they don't get the opportunity to burn, right? To burn and shred. And this is like, apply this to a cryptocurrency network. So like we were saying before in my previous video, we've got cryptocurrency, all of crypto. Crypto can turn into US dollars, but US dollars can also turn into crypto. Now, crypto wants to keep everything the same. So crypto needs something to help keep crypto, like not the same, because it's so versatile, which is good. It wants to keep cryptocurrency, if they want to use cryptocurrency like it is right here in the middle, circulating through our supply, right? So this is cryptocurrency. The thing is that we don't burn our cryptocurrency. We don't have this other portion, right? We have this portion down here. This is the saving portion. This is what holds the base value of cryptocurrency. Am I right? You know, the reason why Bitcoin dropped to only 3,000 and spiked up again was because so many people were holding on down here that didn't let go of their investment. They were holding it up because if they these are the long-term investors, that people with that kind of money in are right here. So right here is like, it's like a savings. It's like they're not going to move their money from that account. All right. The thing is that the banks are keeping the economy, they're trying to keep it the same by deleting and removing money, by burning them, by burning bills every 6 months. So there's a cycle that the US dollar goes through. Now, I'm still learning this cycle, and I'd love to get it solidified so I know exactly where and when and how they can burn this money. Like, who gives them, like, where do they get this money to burn? You know what I mean? Where does that happen? Because we have money burnt, we have money spent. How does it get back to them for them to burn it? You know what I mean? So this is stuff I have to research, and I've been looking, and I can't really find anything on it. And so to draw conclusions up, they're doing it to keep the economy the same, but how they have the money to do that, it's weird. So they have somebody funneling money to them, is how I see it. And we're funneling money to that somebody who's funneling money to them so that they can burn it, because this person is going to get money again because we spend the money, and then they burn the extra money, and then it's gone. So they could potentially say, screw the economy, and funnel in a bunch of money. So let's say Trump builds his wall, but we need money for it. So what do? The banks, they print money, but this is not money just to like us. It would be to the people working, the facilities that built this, everything that has to do with the wall. They print money and they pay them. The thing is that our US dollar value is no longer right here, right? Not where I just erased. It is now stretched. We have stretched the US dollar. which means our economy plummets a little bit. So how do you recover that? You simply cycle the bills back around, burn them. They get the money from somewhere. They're already doing it, and they will burn them. They will shred them. And so that is some stuff, that's some heavy, heavy proof that like even money is just an invisible trust factor. It's an invisible peer-to-peer network, but we are controlled by these people right here. These people right here control this deletion up here. Cryptocurrency, we have the base level bank account for everybody shared, where it will maybe dip into, but never really go below. But we don't have them deleting the money. We have it being spent. We have it being removed. We have it going back into US dollars. We have it going into the yang, the dong, all these different currencies. And so it is a way more stable market and way more stable investment than our US dollar itself. But the thing is that the US dollar is not going to go anywhere. The US dollar is like our key, and just like all the other countries, is the key to cryptocurrency. It unlocks an entirely new, if I could draw a circle around this, I would. It unlocks an entirely new cryptocurrency viewpoint, a construction of what we view money as, right? Because even though it's going up and down, we could use this to buy things like the black market, the dark web, Bitcoin will never ever be removed from the dark web. Why? It's untraceable. It is their form of currency, and they can basically say, we don't have to have anybody involved in our transactions. So then when we surface to this from buying this, like there's so many weird things that you can buy on the dark web. There's illegal stuff, there's legal stuff, there's just, it's a stretch, and it's their currency. They're not going to change that. They don't want to remove that currency. So let's go to mafia, cartel, all these heavy money makers. Do you really think that they're going to let Bitcoin die? They're not. They have too much money invested in Bitcoin. They have too much time invested in these transactions for them to make more money on Bitcoin. So think if you were somebody sitting on $20 billion, right? What would you want to do with that? You would want to use it to increase the value of something that you already own. Why not? So, but you wouldn't want to do it all at once. You wouldn't have to use all 20 right now. You could use 500 billion, excuse me. Or billion, yeah. No, that's million. Brain fart. And so we could very well be in a market that is never going away. It's not going to go away. All right, even if it drops to $3 again, it's still not going to go any lower. It's used as a currency that we can't be traced by these guys. These guys have no say in us. They have say in this, the US dollars, because they're the ones who print it. But hey, we're over here, the people. We the people are going, we make cryptocurrency though. We use your US dollars to make cryptocurrency worth something. We use your US dollars to turn into a Bitcoin so I can do a transaction that nobody gets to ever see. That nobody gets to track and trace and say this came from this person, this address, this individual. So you can't get arrested for buying crazy things, okay? And the point is not to do illegal things with this, although that's what it's being used for. The point is that it is being used for a currency in a society that is hidden, that will never collapse. It will never go away. There will always be the dark web. The people buying from the dark web, putting money in Bitcoin to buy from the dark web. Okay? So we will never experience the deletion of our money like they delete up here. Okay? And why it's so important for them to delete money is that they have to funnel money in for certain situations. Like I said, I'm still learning on this because they are deleting money. They're keeping us here. So it's weird. It's a weird concept. The more US dollars that are in currency in circulation, the less it becomes valuable, worth something. This one is almost the same, but we don't ever have to delete it, but there's a cap. There's no cap on the US dollars. They can print as much as they want, guys. But there's a cap on this. A cap. We're putting a cap on it. But we have multiple coins with caps. Multiple ones. So we have multiple stable values. Multiple of the caps at different cap rates. So this price is going to reflect the cap. This price is going to reflect the cap. This one too. This price reflects the cap because it doesn't have a cap. So they have to delete, they have to burn things. They have to shred their US dollars because they don't have a cap. There's nothing saying we don't have a cap. That's why US dollars was once on the gold standard, because that gave them the cap. And that cap gave it more value, a structured value. So in all reality, cryptocurrency is the gold standard in multiple coins, in multiple pathways. US dollar is just a toy now. Now the US dollar is just something we use to funnel into cryptocurrency to create more wealth. While the gold is used for industrial stuff that you'd want to buy. Like you would want to buy silver now, gold now, all sorts of stuff. Silver is supposed to be 20 to 1 on gold. Do you know what that means? It's supposed to have a value of like $75. Silver's supposed to be worth $75. It's worth $19 right now. Okay, so if you're buying cryptocurrency, buy silver. Don't even worry about gold. You get way less for the amount. You want to make sure you're investing $50 a paycheck in silver. Get in on silver. Get in on crypto. The US dollars has proven itself to not be where our economy is heading. It is not where we want to go. It's not what we want to do. Really, we don't want to. We don't want to screw our own economy by printing more money because we say we need to. But if we have to, they're going to. Am I right? They're going to. And our economy will drop. And so, in my opinion, US dollar is going to become a tradable asset. Something that goes up high and down low. Up high and down low because there's so many people funneling money in silver, gold, stocks, and cryptocurrency. We have palladium. We have other forms. I can't remember the other one. We have another one. So we have Forex trading, the stocks and stuff. We have other currencies. All right. So you see all these circles? Like we're talking a lot of, I'm going to ruin my marker doing this. All right. I have to do some erasing. I cleaned my board with, never mind, I'm not going to say it. It's shaving cream. And I don't think it did a very good job, guys. Okay, so we got so many different, I told my mom I needed some alcohol stuff spray on this. So we got 1, 2, 3, 4, 5, and then cryptocurrency has a lot of coins, in cryptocurrency, but we're going to do in general. Boom. US dollar or any other currency. Palladium, gold, silver. We've got cryptocurrency. We got stocks. We've got national currencies. All sorts of other currencies. What was I doing for stocks? Stocks. Yeah. Anyways. Let's just say other two exist. Okay. What is happening is that we create a market. I guess these could be whatever they want. We're creating a market of volatility by adding cryptocurrency into the world. There's these points where people will sell from cryptocurrency and go into US dollars because the US dollars dropped. But people still accept cryptocurrency's value because it's valued just like US dollars. But hey, it's got a direct ratio to cryptocurrency, so I will always accept US dollars, but you have to spend more US dollars now in order to buy this shoe. Car. I was about to draw a shoe, but I was drawing a tire. So I will take $60,000 US dollars for a $40,000 car, because I can turn this $60,000 into a coin that now is way more stable, that's actually lower than what it was worth before. So the chances, and it's got a track record of going up and down. You see where I'm going here? Like, we can transition our money into things to where this $60,000 is $40,000, but I had to spend more US dollars to get there. So this guy that got the $60,000 puts it into a cryptocurrency that ends up spiking. Now he's duplicated his money, and he removes his money. Now he's made even more money than the $40,000 on the car, and he puts it into gold and palladium and silver. Splits it 3 different ways, because gold and palladium and silver are down because everybody that was previously in those invested in US dollars, because the US dollar went down, because the person that bought it, the US dollar went down, so these guys left. So it's supply and demand kind of thing going on here. And now he has got in while at the bottom of these ones, while these guys got in the US dollar, and the US dollar now goes up. Now these people have duplicated their money, right? And then they go, hey, I'm going to invest in stocks, I'm going to invest in some cryptocurrency, I'm going to invest in some coin, right? And I'm going to buy silver. And then all of a sudden these guys go up. Now we've got everything else going up, and this guy's going, I pulled out, and I'm sitting in US dollars. So US dollars, let's say US dollars is now going down. He pulled out and US dollars is going down. He thought the US dollars was going to keep going up, but it didn't. So he lost the transition, but he didn't lose all of his money because it didn't drop low enough. He still has his $40,000. But he missed out because he could have put in this coin and in gold and in some and kept it in silver, because these people had their timing come through where they made money off of the US dollars, and so they pulled out when he put in, and then they made money on these because other people were put in there. You see what happens, what is happening with our economy? It's becoming tradable. Our entire economy, and we're not even talking just ours, we're talking national currencies, tons of countries of currencies that trade, that are tradable. That in between there is spikes and downs and ups and downs that if you're smart enough, you will be keeping track of, and you'll be able to get in and out on certain markets that make you money, that make you money without ever having to really do much thinking about it. You just are involved in this market. And that's what our generation is going to, guys. Our millennial generation, our baby boomers, and all of these generations are going to move us into a economy of volatility, of being off the backs of multiple currencies, cryptocurrencies adding that in there. All right, so I hope this really gives you a form of an idea of exactly what's happening to our economy right now. I mean, you quite literally have like MTI, Mirror Trading International. I'm going to throw this in there because MTI is trading Bitcoin. And all this is trying to do is make you more Bitcoin coins. All right. So you make more Bitcoin coins, but Bitcoin drops. You still are holding on to those Bitcoin coins. Your price drops, but the thing is, it's a long-term investment. I don't care about the price dropping. I care about them making me more Bitcoins. Because the more Bitcoins they make, let's say that it drops and drops, it drops to $2,000, okay? I'm going to put more money in. I'm going to put more money in. It drops to 1K. I'm going to put more money in. And not too much money. It doesn't have to be, it can be $100. It can be $200. If you watch my MTI videos, you can see the actual compound effect in action and what it will do and how much it will overweigh the amount Bitcoin could ever drop. It will never lose its value. Remember that. So a trading platform that's mirror trading that has a success rate will never lose you your investment as long as you're smart enough to keep investing. You will eventually tip the scale, and eventually it'll only be making you money. And that is only a safety feature if it drops. If Bitcoin just keeps going up and down and up and down, and they're in there making you more and more Bitcoin, 10 to 13% a month is insane, guys. That's insane. Literally from my $400 investment, I'm going to make $32,000 when I'm out of the army. $32,000, okay? Extra from $400. Just taking a risk that Bitcoin, even if it drops, they'll save my freaking Bitcoins. And then when it drops, it'll start trading them again. Although it'll be trading with $200 now, it doesn't change the fact that I have more Bitcoin. So if Bitcoin shoots up, I now own more Bitcoin than I had previously of the 400. So even though it hits the $400 level where I was previously, I now have $800 when it hits that level that it was at $400. You see what I'm saying? It's multiplying your freaking Bitcoin, which is multiplying your odds of having more money when Bitcoin goes up. Okay, so that's powerful because I only have to do with $400, even $100. I think it was like $100 will give me $20,000 at the end of 3 months, or yeah, it's like $15,000 or $19,000. $100 investment. That's our minimum, guys. And that's taking a freaking chance on something that you can just leave money in for the long run. Like all those coffees that you were gonna buy, no longer you're gonna buy them. They're going to MTI. That's how I see it. I see it as something that can change your life if you get in early. Seriously, if you get in early, all right. And getting in early could even be what is money? Getting in early. Like I was saying, if Bitcoin drops to 2K, you still want to get in early. If it drops to $3, you still want to get in early. You know what I mean? Like even if you just lost to $10,000, and I'm sorry if you did, but I haven't lost $10,000, so I don't know how it feels. But that would suck, right? You want to get in at the bottom again. You want to not lose the risk-taking factor inside of you, because once you do and you don't take that risk again, you've literally said, screw my 10K, it doesn't matter. I'd rather keep my $400 that I could have used to buy more Bitcoin and make this back in the long run if Bitcoin hits an uptrend. See what I'm saying? It's literally, it's a solid investment if you know what you're doing and you know what it's doing, right? And its track record is really good. It's making me money, guys. It's making me money. All right. Quote for the day: you shouldn't blame yourself for things you did in the past when back then you didn't know what you know today. So it's actually like when I was trading Bitcoin Diamond, I think it was, and I lost money in no, it was Liza coin. Liza on Yobit. I would never use Yobit again. I do not like Yobit. I lost like $600. Okay. And I let the fact that I lost $600 affect me at the time where it hit a low, all-time low. We're talking all-time low. And I had $400 that I could have put in there. I'm sitting there looking at it. Why was I watching it if I gave up on it? But I was there to watch it. And my brain was like, put your money in, dude. It's going to go up. It's literally all-time low, base level, lower than base level. And you're not going to put your money in? I didn't put my money in, and guess what it did? Shot up. I would have literally quadrupled my money, and I would have made all my money back that I lost, and some, and some, and some. I literally missed out on 300% markup, like 400% markup, and I'm sitting there crapping my pants because I made a choice based off of blaming myself for something I did in the past, which was not pulling out. You can hate yourself for not pulling out of your market, but is that going to do you any good when you need to be thinking clearly on the time that you need to put your money in? It's not going to help you. So yeah, that is one time. There's been many times where I have let it control me, and I have lost. And I went against my gut feeling because of something that happened in the past. Don't ever go against your gut. Seriously, every time I go against my gut, I miss out. I missed out on a 200% stock on Robinhood, another 5,000% one. I'm not like, I literally pulled money out at HMNY, and I lost. I literally pulled out like 2 days before it started its freaking 5,000% climb. So, quite literally, go with your gut. My gut told me not to pull out. My gut was like, dude, you literally should just put money in because it's going down. I think it was an HMNY. Yeah. Not exactly sure if it was. Or HELOS. Helos. Anyways, go with your gut. Do what your gut's telling you to do. All right, please, because I know for a fact that your gut's as good as my gut. My intuition's as good as your intuition, and we can make things work. All right. Anyways, guys, I hope you enjoyed the quote. I hope you enjoyed the presentation. I hope you understand cryptocurrency a little bit more, relating it to our economy as well. All right. Have a peaceful day. Bye.